Well guys, glad to have you on board again today. We'll make an intraday review and try to forecast what we could see this afternoon ahead of the US session. We are nearly reaching, let's say, probably what's about to be the end of the Euro session pretty much soon. The morning of the Euro session, heading into the US session this afternoon for us. So I've been making some reviews for the German index earlier today, just caught a bot entry right on the bottom right now. So we're going to review that trade and we're going to try to make a forecast out of what the Nasdaq could make and play this afternoon. So we'll just see how it goes. I'm going to put an alert in here just to make sure we're not going to retrace back to my entry prices. Otherwise, we'll have a risk management to make and we'll set the target right in here, meaning that anytime we get to retrace up to resistances will be a validation at that stage. All right, now that being said, we're going to switch. Make it first, before we get into just intraday trading, make a few seconds having a look at what's happening out there. Big markets, if we do have some major swings that may change the overall swing scenarios. So quick swing introduction. I think we might want to have a look at eventually General Electrics, but I don't think we have yet broken the support. We're going to confirm that. We're going to have a quick look at the gold, quick look at Nasdaq in cash sector, and we're going to have a look at VXN, who's been dropping. And AUDNZD. So we're going to just do it first with Bitcoin as usual. We're going to cover this up in a daily chart time frame. So probably a bearish engulfing to happen today. That will just, if it happens to be the case, I would have to be a low. Would this to be a lower shadow candle, because otherwise it will mean that we terminated that bullish impulse, not breaking the resistance. So probably after not breaking the support either, we'll just say that we're back into the desert crossing phase, just on another shorter time frame compression. So today is going to be important kind of close. If we do make that bearish engulfing, then probably we're gonna sign the end of that bullish attempt, terminated basically that bullish oscillation. The oscillator would turn bearish. That's the first time for a long time that we've broken out in terms of momentum, so I would be surprised to see the price not doing it as well. But price is king, which means momentum is there to forecast prices potentials and to see the price movement strength. So this suggests what I've been saying back then, that we should still, I think, see momentum making higher highs and lower lows. So we should see the price doing it as well, but there's no certainty. So until we manage to have that viable with candle closures, we need to remain cautious, because it could just mean that the desert crossing phase is still far from being over. Same thing goes for other cryptocurrencies, of course, because if Bitcoin stays right into its range and keep on ranging that price area and keep on compressing, then obviously other cryptos will as well. So today is going to be important. Either it's going to be a lower shadow candle, and obviously I think tomorrow we should have the outburst, or in the next following days, because if we reject bearish potential, it means that we're going to increase bullish potential, and I think we should have kind of an outburst. If today happens to be a bearish candle, and if it's confirmed by tomorrow candle bearish as well, then probably we stay into the desert crossing phase for extended period of time. The fact that we've been reaching out to triangles apex doesn't necessarily mean that we're going to have the momentum extensions, the volatility extensions right now. It just says it's going to happen sooner or later, probably sooner than later, but it still remains uncertain. We never ever going to be able to put a timing to market. We can just speculate on timings and see if the market reacts or not. In terms of gold, I will be clear, what we have in here suggests that the market is absolutely lost, and just like I was forecasting back then, I think we made some kind of early breakup of the 38, suggesting that we may have higher prices to come forward, but the question is, what will be the timing in here as well? And the market seems to be lost. Basically, momentum is back to zero value. We've got the support of that bullish trend line, so I pretty much like to see see some bullishness in the gold, probably today, tomorrow, we'll see about that. But until then, we still have to forecast a potential timing, which means leveraging in here is not yet possible because we're still pretty far from having a trend. We might have this if we find some support out there, and if we reject the momentum upward once again into breaking that bearish trend line attempt and installing the momentum into overbought territory, that will be a good sign. Probably means that we're going to extract from that trend channel. Not necessarily this one, but I will basically say that we're going to break that trend line by the upside, and this is pretty much what I would like to see. And until further notice, we just need to remain cautious on the gold, because it might be ranging that area just to wait for that trend line support, that channel support. So waiting for further information on the gold, no panicking, but it's really too dangerous to be leveraged in here. So make sure you're not too much into this one until it managed to really validate. AUDNZD kind of trying to attempt a rebound out here, but I will remain really cautious as we managed to make yesterday's daily candle close below the 60%, 61% Fibonacci level, suggesting that as long as we're remaining there, potential remains to the downside to me, and probably heading to downside. Alright, sorry about that. Had a long phone call. But anyway, lots of things have been moving since then in the DAX index. Actually, not that much in terms of price interest, because we basically have a nasty squeezing pattern at the play, which basically it means that at that stage, a stop loss must be placed for those who've been playing. The buy entries that we're gonna, like I made earlier today, by basically buying that price exactly. So right at the bottom in here, got a perfect price. We made a second attempt in here, still inside the bullish pattern, no breakdowns, exit pattern triggered on the momentum. So now momentum is exhausted. We're kind of digesting this into a squeezing pattern. We've restored some bearishness with bearish cycles, but the momentum is squeezing. So you don't trade bearish, you just do breakout trades, which means if it happens to break by the south, I will apply the strategy, meaning I'll be on the opposite side of the breakdown. I'll trigger the stop loss and see if the market wants to trend lower, or if this is just a trap, because the market could very well just do this, go there, fuck the stop losses, and go here. So stop losses must not be set right in here, because the market could very well go there. It wouldn't be a big surprise. So to me, the stop losses must be placed below the trend channel. So this is where I currently have my stop losses on the DAX. It's 11,515 for the in this price, not the not the price in this level. So if we go there, obviously I'm out, means I've been trying to buy that area, the market isn't responding, and if that's the case, then everything is just wrong. I would have taken the loss, but I basically would have done my job, meaning that the market, I paid the support, then great job, a good price, but the market decides to go otherwise, basically break the support without even rebounding. Because I think, first of all, if we want to go lower, I would suggest the market may just make another attempt at testing that bearish trade, that bearish channel. Yeah, so if we go there, I think that this is where I'll handle my risk, which means as a bull, in here I'll see if we have bearish signals. If we still do have them, and if we have a bearish momentum showing as well, I'll probably rise the stop loss below that low, eventually forecasting probably a tiny reinforcement, but that's all I'm going to do on an intraday basis. And if we manage to break it up and return to that price area, then this is where interesting things will play out. But for now, it still remains highly speculative on an intraday basis. So I would say until we manage to get to that bearish trend line, the market remains under big indecision. So waiting for that decision to take place. This is what the momentum squeezing pattern suggests. The market doesn't know where to go. It's going to pick a decision, and I'm just waiting to see this. So managing the risk, remaining low leverage, as if it goes down, has to be not costing that much, as a stop loss must be set there. And as long as we wait, the stop loss has to be put down and down and down. The trend channel is going lower, and I don't want the price to break it down. All right, so we're going to make it with the NASDAQ index as well, because we're going to make an intraday forecast. We're just going to do the exact same thing as I've done earlier this morning with the French users. So you can basically use that thing as well to just highlight what potential what assets might be potentially interesting this afternoon to me. We're just basically seeking for those who are trading the long-term time frames boundaries, which is what those big gray rectangles you see out there. There is support area, there is resistance. As you can see, support and resistance are pretty close one to each other, meaning the market is ready for a breakout someday. Sooner or later, if we go there, probably we're going to break this one down. And you generally search to trade the boundaries, which means in here we're searching for bearish demand on the USD GPY, trying to get ourselves to trade this after finding out a double bearish signal, which is what we have by here. So I would say double bearish right now is tradable on the USD GPY to go for a breakdown. So it's not good for US equities. I would say this one as well is tradable. We've been trading the resistance on GBP USD. Same thing goes as well. We could have a bearish reverse to go in here. So these two might be going on different shapes, as this is GBP USD and this is USD GPY. So kind of a problem in here with the dollar. So dollar might be ranging at some point. So you decide which one of those two you want to take. Clearly, sorry about that. That's not what I meant to be doing. All right. In here, we didn't get the bearish confirmations, but right now we're waiting for some. So I would just say the only tradable thing today might be USD GPY in terms of forex. And in terms of indices, as you can see, we're trading upper boundaries on NASDAQ, SPX, and the DAX index. It's been showing a pretty nice selling signal earlier today. Now we're back on support for the DAX. So question is that we're rebouncing here or we fail. I've been trying to buy that rebalance right now, which is what I'm doing. And we'll see if it goes. If we manage to break this down, means that we have no support. And if there is no such thing, and we'll have to make it lower. It's just to identify which markets are interesting today. So indices are interesting to search for selling entries. More likely range, but bearish range. So trying to more likely selling the tops of the range rather than buying the lows. But as we are the lows, I suggest we might be buying just a tiny bit of it, just for some rebounces, but no more than that. At that stage. So we're going to do this exact same thing with the NASDAQ right now. And same big bearish signal as we had this morning on the DAX. So the thing is that we might enter consolidation in here, which is absolutely normal and expectable at that stage. But I would kind of expect the market to show some strength in selling by getting in here again, finding the top channel, okay? Searching for top channel reaction, and then probably going to have to dip a toe lower and reverse afterwards. Heading back to those support areas seems to be more like a choice to me. In a 2-hour chart time frame, we might be seeking for the C point exactly. So as selling in an intraday basis, I suggest you spare some of that leverage for some deeper bearish signals, which means you can hold part of that position into the swing trades. So I would say intraday trading bearish today, probably, at least currently on the session. I'll search for selling more than buying into the US session this afternoon. But all it says that basically once I catch up a selling entry, I'll probably secure the gains by taking 50% profit, but spare 50% of the trade size to enter the swing trades, because it might be according to the swing trade scenario as well, in which we've been highlighting already, that the market may go slightly higher this afternoon, maybe eventually trying to chase some stop losses after those previous resistances, but probably that's all we're going to do. So I would expect probably a tiny rebalance at the open, if necessary, or we just go straightforward bearish, wouldn't necessarily be the big of a deal. In a 2-hour chart time frame, we've got ourselves straight into the expected area. The thing is that as we had a gap yesterday, open gap, not filled, opened at the low, closed at the high, generally we break the previous day's highs at the open, and we made kind of a range day, and probably just tomorrow we might have the bearishness. So I'm searching for selling entries only today, but I expect the market to eventually try a tiny rebalance at the open, trying to chase stop losses and go slightly higher than yesterday's high, and creating some kind of a doji. Finding some support, which we're probably doing right now, trying to find a resistance higher today. And once we found both supports and resistance, I expect us to stay in between those two boundaries for the rest of the day. We have the Fed tonight, so obviously it's going to be the game changer. And as we do have Fed will decide to basically make us close at the lows or at the highs, and probably tomorrow we'll create the trend out of it. So that's the point. So obviously we've got Fed, so it's a problematic thing. So I would suggest to trade cautiously today, but mostly searching for selling entries rather than buying entries. That's what I'm going to do, but I think we might have the rebounds at the open. This is why I've been deciding to shortly but steadily trying and buying entry out of the German index right now, and we'll see how it goes. If it goes there, I'll be able to secure the gains, to lock the profits on, and just make sure I'm risk off to play for the rest of that day. And if the DAX is managing its way right up to the open prices, then I'm good, and I'll have a free trade secured with a paid stop loss. At the current stage, stop loss is far away, leverage remains speculative, and if it goes there, it's going to be secured. That's all I can tell. So I would suggest this afternoon remain quite cautious. I would trade NASDAQ and not trading SPX or the Dow Jones, because I think in technical perspective, this one clearly is the most interesting one. And just following from yesterday, I would say the prices we're currently trading in here might be support areas, and probably trying to find some kind of support. This is what the futures index has been doing, testing that support, and I think right now this is what we may expect today, kind of something like that, and heading at consolidation toward it's 8 p.m. my local time frame for the Fed. So basically Fed is going to be there, and you can expect the market to make probably some kind of something like that. Bearish volatility has been taken care of by the Euro session. Probably bullish momentum to expect on the US session, kind of oscillating in between, kind of a 50-50 ratio. The lower boundaries we've been reaching out to probably going to be extended to the upside, and then we're going to just do nothing heading into the Fed. And in here, going to be the turning point, depending on how the market will take it from the Fed. And either we're going to try push higher or closing the day at the highs and probably going to have a higher high tomorrow, or the market closes in here or closes at the lows and probably going to have a lower low tomorrow, and filling the gap first before retracing and making more bearishness in the future. So we'll see about that. I would say right now the most rational thing to me is to try making that trade, searching for a bearish entry to forecast us to reach out to the trend channel, support channel in here. So that will be the goal. You extend that thing. You can see, you can imagine there's probably a trend line in here. And I would expect selling in here, breaking it down, and see how it goes in here. Managing the risk. If it breaks it down, means we're triggering a bearish reversal, which is great. If we're finding some support in here and rebounding, means the bulls are still in control. And that we're going to hold that gap for a little bit longer, and probably going to have to search for high highs. All right. So wait for this. Today is going to be interesting. Obviously heading into the Fed. I would suggest you keep on low leverage position, because things could turn out nasty, because some people may make early position entry ahead of the Fed, some insider job or something like that. So make sure you're not facing and you're not being wrong-footed somehow. So as the market is dangerous, we got major catalysts today. If you absolutely want to make those intraday scenarios, just make sure you're not risking that much. I would suggest you you divide the leverage by 2 and double the stop prices, just to make sure that if volatility shows up, unexpected short-term volatility, you're ready to take it and handle it, and not panic if the market starts to move brutally. Because we know that regarding VXN that we just talked right earlier about, the thing is that VXN is at dangerously low levels. So I wouldn't really be surprised to see VXN going a little bit lower today, as the market is closed right now. Okay, we're going to be pre-market soon, so I expect the market to drop a little bit as it's doing right now, but I expect we could have some rebounds during the trading session. So you might be expecting volatility, of course, because the Fed is showing up. But anyway, we're on technical levels suggesting volatility might be at play. So be ready for it. But I think today, either way, buying and selling might be possible ahead from the Fed, and then after the Fed, you just try to follow the trend that may be creating out of it. Bye, guys. Oh, sorry, taking the comments. Taking the fucking comment. Despite the current pressure for me, knew the price will run more, then bleed off and go lower, then it goes higher, and more like, I'm sure Bitcoin will rise. I don't really like that kind of certainty. It doesn't really look like a trading vocabulary. And when it comes to trading and speculation, I would say basically anything like sure or certainties like that is just generally bullshit. Phil, the loss in fall of price when it happens again. Someone will help me. Fuck it! You're a fucking spammer. Get the fuck out of here. Alright. Motherfucking bullshitter. So this is fucking bot spamming, and all those fucking comments goes as well. I don't know who the fuck is Diego, but don't get the hell out of here. Don't get the hell out there. It's fucking spammers. If you have to spam to get clients, means that what you're selling is pure bullshit. So get to delete all that fucking stuff. Yes, this is spamming. What the fuck's happening? Alright, here we go. So fuck those guys. Don't. If you ever see this, people like trying to chase you into products, stupid products, no matter how smart they're trying to make their shit. When you see this, you know that this is dumb product. You just don't get your hell out there. And if you ever got into this, if you see somebody making commercials like that for product you're into, just get the fuck out of here. And I hope you didn't give them a single cent. These are the guys I like to fight against. I try to get you out of them as much as you can. Those are scammers. So anyway, sorry about that. It really pisses me off. I mean, those guys will never stop. I mean, damn it. So maybe you can describe for people like me, I'm trading only cryptocurrencies, how to start trading stocks or asset technically. This is basically what I'm trying to do each and every day, trying to get you guys out of just crypto trading only. And you'll see it's not that big of a difference, because if you do want to approach the market the way I do, meaning in a speculative perspective, then it's always going to be the same thing. Meaning you never know, and you basically make a technical speculative approach. So the strategy works just fine, either in crypto, on regular stock markets, or any other asset classes. So you just try to apply the strategy, make sure that some technicals will remain the same. It's just the fundamentals might be changing a bit, but fundamental trading is something you're going to have to learn, but it's not that complicated. Okay, it comes with experience, which means through time you're going to get better and better, because you're going to have a better understanding of the market in its overall structure. But that doesn't prevent you from trading until then. Meaning you doesn't really have to have a sharp comprehension of the market, knowing how the macroeconomic works to get into trading. I suggest you start making some intraday trades, and then if you want to get interested into more economic stuff and things like that, you can get into swing tradings, because it requires a little bit of knowledge. And I stand on this, you don't really need to understand economy to get into trading, even in swing time frames. It's just swing time frames will help you being a little bit better if you have some kind of oversight of what the economy's shape actually is. So it requires a bit of knowledge, which is not the case when you just do intraday trades. But never get yourself into scalping. Scalping is bullshit. For beginners, it's not how it works. If you're a beginner, make sure that you're not getting yourself into scalping. What you want to do is intraday trades. I mean, how to choose a platform, a broker, maybe places where are accepted cryptocurrencies. All right, so I think that market is about to develop through time, which means actually right now I don't see that much of brokers accepting cryptocurrencies to trade global asset stocks. There might be a couple ones that I just don't know about. But I expect that in the future, this kind of things may be changing, but it doesn't really make a difference. You've got so many options today to get into trading. You've got CFD contracts, obviously it's not for the US citizens, but so many things. You got option trading, basically anything that gets you into profiting or losing from price movements is a vehicle you can use to trade. So yes, as I said, option trading is viable. No binary option. Binary options is bullshit, obviously, but option trading, you can buy put and sell. Buy put, buy calls, you can do whatever you want, okay? How to split the capital, what the percentage of the risk management and reward. It will remain exactly the same. Speculative trades must never be done. Losing more than 2-3% by trades for a single trade. Maximum for those who absolutely want to take the highest level of risk can get up to 5%. But 5% is really big. It means if you just take 4 speculative losses in a row, you can lose up to 20% of your assets. And that's way too much for a sustainable trading strategy. So I would say yes, really, 2.5% is really what I do personally, and what I strongly recommend you not to do more than that. And especially not if you're beginning. And if you're beginning, I suggest you do even less than that. You should go for 1% loss for speculative trades until you manage to really get yourself comfortable with speculating, doing it safely, and then you can get up to 2.5% like I do, and eventually even higher if you absolutely want to use leverage. So you tell different things in video, but when I try to aggregate all the knowledge, I have some difficulties. Yes, I do tend to say a lot of things. I'm a talky kind of guy, but I know it may sound like too many informations to you, and that's normal. Believe me, that's the case. It's done on purpose. Most of the guys out there will basically try to simplify things to make it easier for beginners to get things, so they will make some shortcuts that I really don't stand for. I don't like that. I rather like put you into the worst possible scenarios in which I'm just talking to you like you were professional traders as well. Meaning you have to put your hands on the dirt and dig into what I say. If there's something you just don't get, you try to Google it or whatever this is. You're just trying to get yourself the information you need to understand what I say. And if you feel like you're overwhelmed at the beginning, then that's normal. That's absolutely normal. It's just that it's going to take time to get better at this. But I'd rather like to put you in the hardest situation rather than that, and simplifying things. Because trading is not simple. Lots of people will make you believe that this is simple, generally because they're selling you some stuff and they don't want to scare you out. I'd rather like to be honest with you. It's scary because it's difficult, and all those who are bullshitting you, making you believe that this is simple, generally are doing this because they're selling something. And reality is generally different in the end. You'll figure that out by yourself, that trading is difficult. Lots of people are failing in there. But obviously, most people just don't want you to know that. So, yes, all I would say basically to your message is get yourself to work this out. It takes some time. Be patient with yourself. You're not going to get this in a couple of days. It's not how it works. All I suggest is that when something seems to be really too complicated, you just let it go for now, and eventually it will seem more handleable in the future. And you just keep on learning day after day until you think this is about time to get yourself into digging into this. So, yeah, I would say keep focus, okay? Try to learn things step by step, not just seeing the overall, the big picture. It's not about time to get to see the big picture when you're starting to trade. You just pick things that seem relevant to you into what I say, and if you need additional information, go gather those information all over the internet. You got plenty of information available out there. Just make sure you're never ever paying for information. Don't get into fucking buying coaching things and anything like that. It's just bullshit. So get the free information out there and take the time you need to process those informations, and it's going to be a person-to-person thing. Nobody will learn the way someone else will. So it's really you versus yourself, and just make sure you buy yourself enough time to process those informations. Sorry for the lack of participation film occurred with translating scenarios for French users. I can't help because I don't trade using a strategy. Yeah, no problem with that. If you're in a trading, obviously, when we do those Wednesday shows, we're just going to cover up applying the strategy using the indicators. So I was talking to those of you who have those indicators, to share your usage of them just to help you getting better. But obviously, it's not an obligation. So you should know. I don't get it. You don't really need a pro account on TradingView to get the indicator. It's not how it works. The standard version of TradingView allows you to use 3 indicators per chart, and I do recommend you to use 3 indicators when it comes to my strategy. You can use sine waves oscillator, momentum oscillator, and sine waves chartist version, the one that's drawing the bulls and bears and things like that. And that makes 3 indicators, which means you can use the standard version of TradingView with indicator is no problem to me, and I wanted to stay that way actually. Yeah, they're doing constant fucking spamming to upgrade to Pro. Yes, that's how it goes. And by the way, if you go to our Discord channel. Just give me a second to help. Yes, if you go just right here, you go into the Discord channel, you get into the announcement channel. If you go to the pinned messages, you'll see this one. That's the first one. When I have a deal, I can get you 30% off, additional to the minus 50% deal on public prices. And it gives you approximately a minus 65% out of public prices on TradingView. So this is just... Once again, no affiliation. I don't get a cent out of it. So I'm not winning anything by just saying you that. It's just saying if you expected to get a TradingView account, just use that thing. It's basically that 30% off is what I should be rewarded by just getting you into TradingView. But instead of keeping it for myself, we basically built something in which we're giving you back 100% of that reward. Okay, it's what we call the referral program. What most of the guys like me are doing generally, they strongly invite you to get into TradingView, and they keep that 30% off for them, which basically that reward, they keep it for them, they make money out of your back. I just decided never to do that, because that's the point. What I say is basically what I stand for. I'm not just a talky fucking kind of guy. I stand for what I say, and this is proof of it. I mean, I could make 30% off your back, and I just choose to reward you with that. The 30% money, I just give it back to you. It's just not me who's handling that thing. You got all the information in there. It's a member of us, it's Duke, that is taking care of this, and it's going to give you the reward of those 30%. So basically, we explain you how to get 50% off TradingView, and we additionally add the 30% reward that we can get out of here and sending it back to you when it's paid to us by TradingView. So it was just to say that. And once again, if you don't need, you just don't take the Pro account. It's not necessary. I know they're bullshitting with the content spamming. So if you feel like you want it, and if you feel it's worth the price, go for it. If you think it doesn't worth the price, just stay with the free version. It can work very well. You just have to fuck up the constant spamming and live with that. So, although other crypto trader only for my scenarios traded sometimes wrong-footed, like every single indicator in the chart. Yes, the thing is that right now the crypto market, and I've been clear with that, it is untradeable because it's not technical. The patterns we have right now are psychological pattern, which means we're kind of exhausting any kind of speculator that may be remaining in that market because we just don't move. So the goal in here is to really exhaust the speculators, just to make sure that the ones who still have the money in the market are people ready to wait for a long time. Those who have the mindset for a buy and hold. All those who will be switchers in between who will say, okay, I've been waiting too long, volatility should be back. No, nothing is for sure. We're just going to wait for further information, okay? It's just I stand for what is and what seems to be the most probable to me, but that's all it remains, okay? If we don't have volatility in a week or a month from now, don't be surprised. It may take unlimited amount of time to get to restore the volatility. I just think it might be coming sooner than later. That's all I stand for. For an invite to the indicator by the look of your Discord window and sound alert during your video, you already spend so much time reading messages. Yes, I do spend basically 80% of my workday job. My day job is really answering your questions. I'm spending all my day to answer emails, questions you send me into TradingView, into Discord, into whatever. So into Twitter, into Telegram. So yes, my job actually right now is no longer trading. It's most likely answering your questions. So anyway, If you prefer, we could maybe share our scenarios with our own strategy indicators, and we could evaluate them with your strat, maybe discuss similarities and difference. But I feel that's nowhere near what you ask for. Oh, yeah, no, I wouldn't stay in for this. It's basically Wednesday video is going to be because some people asked me to do this, that we were seriously lacking of educational content regarding the indicators, that basically the day-to-day job I was doing was making each and every day the same market reviews, and simply users tried to tell me that they needed more educational content, and I just wanted to make them for you because it sounded relevant to me. So I'm just sparing one day a week for indicator users, means that all the other 5 days of the weeks will remain for everyone, okay? And those videos will forever remain for free, and I still stand on that. Even on Wednesday, I think you can still learn a couple things. But obviously, yes, Wednesday starting from now will mostly going to be for indicators users. So it's not to pull away those who don't have the indicators, not even inviting people to get the indicators. I stand for this. You don't necessarily have to have the indicators to use my strategy. They're just an additional help to apply the strategy by itself. But you can just learn from the strategy. This is where the biggest value is. And the strategy is for free. I'm sharing it with you guys each and every fucking day. Okay, indicators are really helpful. I stand for this. Otherwise, I wouldn't even use them. I mean, I'm not an indicator seller. I'm basically fucking using them each and every day, which is not the case for indicator sellers. This is how you stand for making a difference between an indicator seller and a trader. The indicator seller will basically sell you 10 to 12 indicators, even more than that times time. It's just guys who are building indicators on a day-to-day basis and selling them, but they're not using them. I do use them. All I do is improving those same indicators day by day by reviewing some algorithm, putting some code lines in, putting some out, and just doing this. I'm improving the work, but I'm just working on the same indicators forever. And those who know me for 5 years or 6 years even from now, because I was using those same fucking indicators 5 years ago. I was trading with time wave, I was trading with momentum, and I never ever changed that. I created some other indicators, but those were technical frameworks indicators. In terms of signaling, it has always been coming down to sine wave and momentum. I don't get that. I still not making money to pay for Trader's Edition. Yes, or actually, if you don't have the money, don't pay for extras. The indicators clearly are an extra. If you don't have the money to pay for them, just don't. That's not going to prevent you from being a trader. It's just additional help. If you've got some money to afford getting the indicators, I think they're a plus, and I think they're clearly worth the 30 euros a month. But if you can't, I mean, don't get yourself into something you just can't afford. That's how it goes. Don't get to make overcomplicated choice. You don't have the money, spare that money for trading. That's more important than using indicators, all right? Anyway, and Damon, thank you, Gregor. I found a lot something new from it. Missed these educational videos. Yes, and we're going to do this each and every week. I really enjoyed doing this. So yes, we're going to keep it that way. It's just 1 day a week for educational content. The rest of it will just remain the same. We're going to just spare that between swing trading and intraday trading. But you know about that. So that being said, I'm going to leave you guys with that. Wish you a good day. Be really careful about the Fed, and see you tomorrow. We'll be able to have clearer sight once this is done.